I have a question for Mr. Chanos. You said earlier that the government has never uncovered corruption, I believe, for the past 20 years, which is absurd. It's all done by journalists and short firms. But what does that mean that Washington is at fault then? Granted, these companies shouldn't have been corrupted in the first place. But if they're given the opportunity, wouldn't it make sense that they would abuse? Wouldn't it be foolish to assume that they wouldn't abuse this power that they have?
Question mark. Thank you, Jim. It's a good question.
Well, let's just look at the response of this crisis immediately following the demise of Bear Stearns. You had the CEOs of our major banks and brokerage troop down to Washington. What are the two things they requested from Washington following this stunning collapse almost out of the blue of one of our major brokerage firms? Was it tightened regulatory surveillance? Was it more regulators on the trading desk? Was it something like that? No. They asked for two things. They asked for short selling to be stopped or curtailed, and they asked for loosening in the accounting rules. And on both cases, one was done and changed. The other is under consideration now. So rather than tightening up things and making things more transparent and giving incentives to market forces like short sellers to ferret out fraud and malfeasance, what has Wall Street done? It's gone running to Washington to ask for more help and more obfuscation and more opacity. And that's about as telling as you get.
Does the side for the motion want to respond to that? John Steele Gordon.
Washington could say no.
All right, short and sweet. Gentlemen at the top.
Both sides acknowledged, I think, that one of the major questions here is who's more to blame. So I want to try to make it maybe philosophical and go back to the Keystone Cop example. So my question's for against the motion. So let's take the Keystone Cops, couldn't catch the gang, doesn't make the gang less culpable. Obviously, everyone's going to agree. But given that the job of the Keystone Cops in the first place, given the job they've taken on, is to keep order, if they're asleep or corrupt, maybe drunk, aren't they therefore even more wrong than the people who in the first place committed the action, who had no responsibility, fiduciary duty, whatever you want to call it, who had no responsibility beyond what they've signed to, but whom are not nearly in the same position of authority?
Thank you. Nell?
Well, the idea of the SEC when it was created in the 1930s was that it would be about putting information into the market and letting the market sort everything out. The SEC, its authority is very limited. So they're a Keystone Cop without a billy club. And it's a good idea to consider that again. And it's a good idea to consider rewrapping some of that unwrapped regulation that we talked about. But right now, Washington doesn't have the tools and it doesn't have the authority necessary, I think, to provide that kind of oversight.
And your opponent, Nouriel Roubini?
Well, you know, I go back again to the issue of incentives on international scales. Financial crises do not occur everywhere. There are countries like Canada and many others that have better regulated and supervised financial system, and these things don't occur. It's not that Canadians are more moral or less greedy or less incompetent or more competent or more arrogant than anybody else, and same thing for Europeans and Asians and you name it. Human nature is similar, and by the way, they are not crooks. You know, everybody is responding to incentive, everybody wants to maximize profit, returns, or whatever. That's what market economies are all about, but we know that human behavior can lead to excesses in society. That's why we have institutions in society, otherwise the law of the jungle. And in the case of financial market, we know that greed and excesses can lead to damaging effects. That's why prudential regulation, supervision of financial institutions is so much more important. So at the end of the day, it's good public policy that makes a difference between crises occurring, not occurring. That's the lesson of the last 50 years. It's not about human nature or greed or being criminal.
We have time for one more question.
This is for against the motion. It seems like this is a chicken. Which came first, chicken or the egg?
Do you mind if I tell the panel that actually both sides can address your question? We'll be
sure, absolutely.
Against the motion, but please, everyone, consider this your final.
And maybe
question.
so appropriately, chicken versus the egg. Chicken being Washington, being afraid to do what's right, and Wall Street, who's laid a ginormous egg. If it is a chicken versus egg scenario, and as Mr. Gordon pointed out, that we have a history of financial crises every 20 years, for the most part. Wouldn't it seem to be that Wall Street, since our country was founded first and foremost by entrepreneurs and businessmen that set out to form their own government, that it would actually be driven more so by Wall Street than the government that they formed?
Alex Berenson.
I think just to address that and to address the previous question, because I think the previous question is a very good one. Do you blame the cops or do you blame the robbers? If the robbers are going to steal, isn't it the cops' job to stop them? I think you can take the Keystone Cops analogy too far. We want to have a banking system that makes loans. We want credit to be available to people. You know, the invention of the credit card is actually one of the great inventions in American society, in the world in the 20th century. It really is. It's the democratization of credit, where you didn't have to go in and get down on one knee before a banker to get a loan, was meaningful to people. Being able to get a house and a mortgage is meaningful to people. So what we don't want, they're robbers, but they're not robbers. They're people serving a useful societal function, and so that makes, I know, I can't believe I just said that either.
I think Niall Ferguson is trying to get in here.
But wait. Let me just quickly finish.
I would advise you to stop speaking immediately.
Let me just quickly finish. That makes the job. So that means that the regulators are not strictly out to arrest them or bust them. We have to set up a somewhat permissive regulatory scheme to allow them to operate, and then hope/insist that they actually don't run the system into the ground, which we didn't do that.
Can we do chickens and eggs now? Because I'm getting bored of cops and robbers. Far be it from me to lecture an audience like this about American history, but it seems to me that the question wasn't really framed quite correctly.
I think you're handling it okay, actually.
Thanks. From the very inception of the United States, there was a profound tension between Washington and New York. Alexander Hamilton's vision of the United States as a financial power was not shared by all the founding fathers, and indeed James Madison was extremely skeptical about it. That's why there was consistent resistance to the creation of a central bank in the United States that lasted right up until 1913, with the Bank of the United States being chartered and then gotten rid of twice in the course of the 19th century. So I think we need to see this as part of a long argument within American political culture. How powerful should New York be? And should those other parts of the United States, let's call it Main Street, should they in fact dominate? And I think what's happened in the last 10 years is that New York did get the upper hand. And I think the rest of the country is ready for a backlash.
Ladies and gentlemen, that concludes round 2 of our debate.